Hello, welcome to another video, and today we'll talk about the stock market. The word stock market comes from the Latin word bursa, exchange. The first stock exchange, beurs, was founded in Antwerp in 1531 and traded bills of exchange, gold, and silver coins. The origins of the New York Stock Exchange date back to 1817, when traders began meeting under the plane tree on Wall Street. The mechanism of the stock exchange is basically very simple. The exchange is a market where prices of securities or commodities are set according to current supply and demand. The main purpose of the stock exchange is to bring together investors who want to value their money and companies who need capital. What can I invest in? The basic options are these: stocks, commodities, bonds, but it also goes into other things: index, cryptocurrencies, and more. A share is a security that certifies that its owner, holder, is a shareholder, i.e. that he has invested a certain amount of equity, capital, in a joint stock company. A shareholder has various rights. For example, he is entitled to share in the company's profits in the form of a dividend and to participate in the management of the company by, among other things, being entitled to vote at the general meeting or to share in the liquidation balance of the company in the event of liquidation. The shareholders are not liable for the company's obligations for the duration of their participation in the company. The only exception is the liability for the company's debts up to the amount of the shareholders' share in the liquidation balance after the company is dissolved with liquidation. Some shares are traded on stock exchanges, where supply and demand determine their price. Commodity. Commodities are primary products that can be grouped into standard items such as minerals, agricultural products, or oil, and then traded. The key to such trading is that the commodities in each item are interchangeable, which is why attempts to create a commodity market for gems have failed, because each one is different. Commodities are usually intended to be used in the production of finished products. A bond, also called a debenture, is a registered or bearer security or book entry security that carries with it the right to repay a specified amount owed and, if applicable, to pay specified returns and other obligations. Thus, a bond allows an entity to secure a source of funding without having to borrow, e.g. from a bank, and its creditor base is spread among a wide range of bondholders. BCVS bear market. It is generally argued that a bear market occurs when major stock indices fall from their peaks by 20% or more. A correction is usually defined as a 10% drop, and a market crash is usually said to occur when stock prices fall 30%. A bull market, on the other hand, is usually defined as a 20% rally from the previous low. If we focus only on percentage changes in stock indices, we are not paying attention to the long-term economic cycle. That is, whether there are technological and economic advances that would be reflected in consumers' wallets and corporate profitability. That was briefly about the fugue of the stock market. More on our website www.finaceelclass.org. Thank you, and I look forward to the next time.